Good morning. Today's the 7th of November 2023 and I'm going to quickly go through the economic potential market move and news today, and then we'll look at some levels. So looking at the economic news today, nothing's come out of high importance, but we do have lots of Fed speakers today, and so probably today is going to be one of those days where you want to just tread carefully, trade lightly, because we don't know what the market's going to do, and they're at various times throughout the day. So 9:50, 9:50, 10, 11, not 11, 12 I meant, yeah, all the way through the day. So I would just, today, if there's any good A plus trade setups, then I'm going to take them with short, with a low, one or two contracts. I'm not going to oversize or layer in. Scalp day really. Level wise, it's almost the same as yesterday. This is the MES or the ES chart, which is the 1 hour time frame, and it is the S&P 500 index futures. We're looking at pretty much, we're trading in this narrow range, and let's just draw some lines in because potentially we are narrowing in, and so we're going to see something move potentially over the next day or two, or maybe today. So what I'm really waiting for is, I don't really want to do anything unless we get down to this level here, which is 43.65, and either look for a bounce or a break and retest that level. I've got a bounce area as well, 43.40, 43.31, this area here, and that could act as a potential target if we do take the rejection, break and retest, but it's also a bounce area as well. Where's that level come from? Okay, pretty significant. As you can see, we've got, it's held it there yesterday, day before, and we've held it. We tested it a few days back, and what was the floor became the ceiling. There it's the floor. We've spiked through it, came back out and held, and we haven't quite broken it here. So it's a significant area as well. So 43, in fact, we've even got a daily level as well come through that area. So this entire area, and if you look at the volume profile, we've got this big area of concentrated volume as well. So this entire area is an area to watch out for, and what we've been watching for. That's what makes it even more difficult, because we haven't been able to crack this area. We need to crack the bottom of this area, and we also need to crack the top of this area. So for today, I'm going to be waiting for A plus setups only. My first setup will be a potential bounce off of 43.65 area, or a rejection up here at 43.90 area. Obviously we've got this 4400 area, which is a psychological number as well, and potentially resistance. So I'll be watching level 2. If I do go for a break and retest, I'll be watching level 2 to see whether I should be getting out or holding on, and I'll be looking for either that level to hold or for that level to break. If we do see a market rally, then we've got the tops of these candles here. So I've got an area of supply which is between 44.20 and 44.30 area. So this entire area is a potential rejection area, but with confirmation because it's a big wide area. So we'll be looking for a candle with a big top and tail, and then if we see another candle, we want to be getting in on the break of the top and tail candle, and we're looking for high volume as well. So high volume, and the candle looks a bit like that, and where all the other volume is just average or below average. Have we come to the end of this run? Let's look at the daily briefly and look at the volume. So the volume's waning, it's well below average. Yesterday was even far below average, but it was a narrow range day though. But one thing I've noticed over the last week, we've had these big wide range bars coming in when we're selling off, and these last two bars, high volume, and then the moment we started our reversal, we were putting in these lower than average volume bars, and in particularly this big wide range bar from Thursday, that was even much reduced volume than the previous day, so there's an anomaly just at this point. And then we've had a narrow range bar with a slight topping tail, and that was obviously a smaller candle as well. And then we've had this small 2 narrow range days, so we're trading in the narrow range at the moment. So what scenarios are we looking at? We've got eating time off the clock, and we just could go sideways for a few days and then wait for them to continue to move up, or we're running out of buying pressure and we're going to start seeing sellers take over. And another thing to look at as well, we've got potential area here, in fact round about here, where we could see this trend line crossing with this daily level as well. So potentially, and even if it does get out there, it's still in a daily downtrend, and we could move quite far up still. So that's why I'm hesitant to say that we are going to reject and come back down, because even if we reject at 44.28 area, we haven't quite broken that pivot there, and we could be meeting up with the trend line at some point as well for another rejection. It could look a bit like this, and then where we continue to trend down, but we won't know. So this is the key area, 44.28 to 44.40. That's the area to watch for a potential rejection or the breakout. And we've got this trend line as well, and if you recall before, we had this other trend line sitting along here, which I've got rid of now because it's no longer valid, and we broke through that one. Let's get rid of that. Let's put another trend line in as well to see where we are from. So it's more of a monthly trend line. So if we go to the monthly, let's have a look, or the weekly. So that's how we're looking on the weekly as well. We're in a weekly downward trend line as well. So potentially, if we do break through this trend line, we could potentially come into another trend line area, and that's 46, so it's below 4500 area. So we've got a few areas of resistance, and if we do eventually come back up to that area, we've got this pivot from April 22 as a potential rejection. So just things to be wary of, and don't forget, it's these last 2 months of the year where we get to see the Santa rally as well. But I'm going to ignore that. I just want to play the chart how we see it, and at the moment we're in a narrow range and we're basically waiting for something to happen. So we are kind of creating that formation, and that's it. I think they're my levels really. It's got to be Friday's high, or first, what's that, Friday? If Friday's high, break and retest to continue to trend up. So that's 43.90. High risk rejection at 43.90. 4400 as well as potential rejection area, but we haven't really, we held it when we was up here last, that's the last time we held it, but we broke through a few times, so it's not as strong as that area as we'd like to think. But just this entire area is an area for potential rejection. And then, yeah, I still quite like the bounce at 43.41, and that will, we may see a bit of a pullback and then continue to trend up and heading towards this trend line which we discussed. So that's it really. Just really recap quickly. Looking for a rejection at 44.20 to 44.28. A high risk rejection on Friday's high, which is 43.91. Let's put in my trend line for that area. A break and retest also, that area is a higher probability trade, especially as we're in an hourly uptrend. And then we got the bounce area here at 43.41. There is one more high risk bounce we could consider, and this is this area of demand as well. So 43.58 through to 43.75 area, this entire area. So we could potentially watch for a high risk bounce at this area, but we really want to see a bit of a pullback and come in. I like this area because this is an area of resistance, and we've got higher concentrated volume in that area as well. Okay, so that's it for MES. Let's go on and look at SPY. Similar, still trading in that narrow range. 437.35 area for a potential rejection, and I prefer 438.50 area. So this entire area is a rejection area. And for bounces, it's the same as MES or ES. I quite like this area here, 430.91. Okay, looking at Qs next. I've already done that. Qs. It's all looking very similar. Again, we'll go with 372.75 through to 372.80 area. So that entire area is a rejection. A higher risk rejection, you could be looking at the tops of the shoulders, and it's the retest area as well. So 370 to 371 as a high risk rejection. You got your high risk bounce in that area, 368 down to 366.84, and a better bounce will be, I quite like this area here, 363.75. NQs, ask me on every chart now I go to. NQs is exactly the same, so we're basically watching for 15 for 500 area, 450 to 500, and we've got this area here, 15,700 area. They're the rejection areas, and obviously we've got the break and retest of 15 where we are right now. Actually, this area is broken. Is it broken through? Not quite. We've got, if we can break that pivot and pull back to that area, it might be worth the continuation of the trade. And I think that's it. And obviously we've got the bounce area. We could potentially, we've got, watch for this area as a bounce. Let's go with that one. And the reason I selected that area there at 15,590, 14,952 is because we've got area of consolidation, tops of candles, bottoms of candles, bottoms, tops, and a consolidation, tops again. So there's an area of confidence, that entire area. So if we come back down to this area, we're watching for a potential bounce. MCL, do it again. Look at that, how long have we been talking about this? I didn't take any of these trades, I wish I did now. But I said we've broken through this area. Potentially we're looking for a rejection, still looking on a downtrend. We're coming into an area now which I've liked for a while, and that is 77.98, so this area here. I'm going to keep an eye, I'm going to put an alert because I want to potentially go long if we can get down to that area. Either go long on day trade, or I might take a swing trade on an oil ETF. So looking for a bounce at 77.98 or 78 area. We've touched this area of demand and rejected it at that right spot on as well, and that's coming from this area here. It's probably based on a daily candle because it's not quite in alignment. So I quite like that area. Potentially, if we come back up to this area, we could see another rejection because we're trading in this downward trend channel. So we are trading between these areas. So we could play this channel back up and see what happens. So that's the area I quite like. And then gold. Let's look at the daily first because this was on a really strong, look at that. Yeah, I've probably lost interest in this now. I was waiting for the breakout off of this box here. I want to see it push up, and got a bottom tail, potentially worth keeping an eye on. Volume wise, to be fair, yesterday's volume was relatively low, so maybe we're just seeing a low volume pullback and we could see a push up. I'll reevaluate this if we get back into this boxed area here. Potentially a break above that pivot. Let's see how today sets up. And tomorrow we might have a potential. What I'm also seeing a bit of a head and shoulders pattern as well, when the neckline is actually there. So it's worth keeping an eye on. Obviously, if it's a head and shoulders pattern, we could see it come down further. But I'll keep an eye on this. But I don't think there's no real trade. Let's have a look on the hourly. So we bounced off of that. So we could watch for it's broken down through. Maybe come back up for a retest. Probably be watching this area for a retest. Would be a higher probability retest. So 1984 to 1988 area. And then we got, yeah, I can't, no, 1990, if we can break out over this, we got this high congested area of volume as well. And so this area is going to be quite difficult to crack through. So we could see resistance at that area. And so potentially the break, yeah, I still like the break and retest long. So that's what I'm waiting for. But we need to get over this pivot to see any upward movement really. We've now broken below this 200 moving average, and we've got the 50 moving average. It's curving around as well, and the 200 is starting to curve around. So potentially, if we're going to see a bit of a market rally or the Santa rally, we could see us come right back down again over the next month or two. And potentially we could be even looking 1910. I can't see any other major areas around about this area. These areas to watch for if we do see a push down. And is there another one further up? Let's go to that one. Here, and then the last area, I might as well put these levels in. There, and we're right at that level now. The reason I chose that level is because we saw the big reaction last time we touched that level. Look out for a reaction down. So you could say that now we're back at the same level, we might get another equal reaction. Well, we have. Look out for a big reaction. So this area is an area of interest. Double bottom tail as well. Higher volume, but could be saying that could be ending volume as well. So yeah, I don't really want to play. I don't play oil enough. I'm still watching it really. I've played it a few times, but until I understand it like I do understand the ES and SPY, I'm kind of a bystander watching. But if we can break out through this area, that's the area we wanted to get through. And once you can get up here, look for the break and retest. I'm still like the long, but it may not happen this side of the year, or maybe 2024. But it'd be good to get a pullback and maybe pick up some gold ETFs as a swing trade, or gold as a long-term position. But we'll see. Okay, so that's it really. We've got 10 minutes before the market opens. I'm just going to quickly recap the MES levels again. Higher probability rejection at 44.20 to 44.28. Higher risk rejection at 43.90 to 4400. Might be slightly higher probability because of the psychological number. Better still a break and retest off of Friday's highs for the long. And if we sell off, then we're watching 43.41 for potential bounce. And anywhere else I'll deal with. If we see a big sell off, then 42.80 is another area to watch for. One thing you may have noticed, I've cleaned the lines up on my chart, so I'm going to use the yellow hashed lines when we're between areas of supply and demand, and I will use it occasionally within an area of supply and demand so I can find an area of interest. But I'm going to try to keep it as tidy as possible now, because it's getting quite confusing, all these yellow lines. And I do like the thick lines because the thicker lines show up better when I'm trading. I don't trade off of TradingView, so I use it more for my analysis. So it's nice. I like the thick lines, but some people prefer to have the lines thinner. And I suppose maybe I could work on that, but then it looks like my alert, which is just above as well. So, but I prefer the thicker line because it makes it stand out for me. Right, have a good day trading. Don't forget to trade safe, and don't forget to hit the like button and subscribe button if you want to be notified, and hit the notify button if you want to get notified when I go live tomorrow as well. So every day at 9 AM Eastern time, or here in the UK it's at 2 PM. Okay, thank you for